I now invite Prashanth, Rajan, Government Engagement Head and Chief of Staff from Mastercard, to the stage to moderate this panel discussion and invite the panelists to join him.
Righty. Well, good afternoon, everybody. I'm Prashanth Rajan from Mastercard, and very happy to moderate a panel on the rise of digital sovereignty models. This is a topic. It's good that we're wrapping up today with this panel because a lot of the themes that I think have been discussed today, really kind of come home, particularly with our experts here on the stage. We're fortunate to have a terrific group of folks. I'll start with Nigel, Cory, Director at Crowell Global Advisors, Kati, Suominen, Founder and CEO of Nextrade Group, and Tami, Overby, Partner at DGA-Albright, Stonebridge. Let's go ahead and dive in. Nigel, I'll start with you. There are a number of US companies, a number of CSI members that are leaders in the cloud, but are facing growing market barriers to providing services around the world. And one example, recently the EU has highlighted its interest in sovereign cloud solutions in big markets like healthcare and finance, as well as defense. Could you tell us more about this push for sovereignty in the cloud space and specifically what this means for US market access?
Certainly happy to. Firstly, thanks to Christine and Casey and everyone here at CSI for putting on another great event. Cloud sovereignty, I suppose, is a part of the second wave, I would say, in sort of sovereign tech concepts following data and what we're seeing in terms of early attention around AI sovereignty. And it's obviously, besides China, the EU has been most interested in it for the last few years, but how it's pursuing it continues to change and evolve with geopolitics and trade and technology. But up until recently, Europe was looking to try and use many China-like rules to penalize and exclude foreign cloud providers from the EU market, namely via the EU cybersecurity scheme for cloud services, which was focused on a good thing in terms of setting a common harmonized approach to cybersecurity for cloud firms across Europe so that governments and firms had an apples to apples comparison of cloud cybersecurity. But with the added European/French twist of a sovereignty annex attached to these technical rules, which included the China-like criteria with local staff, local offices, local data storage, local ownership, and local control. Thankfully, after a fierce debate between EU members, the sovereignty annex as a part of this initiative was discarded, but the dream lives on, I suppose I would say, in the form of new and ongoing policy initiatives in Europe. Namely, it's come up in the context of Europe's Cloud and AI Development Act, which aims to boost sort of EU cloud and AI capacity, which is all well and good. And while it doesn't directly deal with procurement, which is where I think this focus of sovereignty is going, they did announce that in parallel there will be an effort to create an EU-wide public procurement process and criteria for cloud. And that's where I think we'll see this play out. That's problematic in terms of if it follows the French model, which in tech is typically not the greatest model to follow, in that the basis of these sovereignty concerns is similar to what France does at home with what they call their Secnum Cloud criteria certification scheme, which would be all well and good if it was only focused on public services. But in France, it's applied to vital and essential service sectors. So government plus 600 plus firms who would have to use this French cloud certification scheme. And the last time I looked, and this was a few years ago, there were only 4 cloud firms authorized, all of them French. And so if that type of scenario plays out at the EU level, then the market will change dramatically for US cloud providers.
Yeah. And turning now to Kati, and staying on this digital sovereignty theme, we're seeing digital public infrastructure, also known as DPI, expand globally. And it covers anything from national payment systems to identity platforms. And this is a new front in this broader debate over digital sovereignty. Kati, how are you seeing these DPI models reshape the global digital economy? And specifically for member companies here, how can the US, push for approaches that promote openness, interoperability, innovation, rather than exclusion and fragmentation?
Yeah, great questions. And first of all, thanks for having me as well. Great to be here. Thank you, Christine. Yeah, like you mentioned, Prashanth, the DPI models are really spreading around the world. We counted just then 150 identity systems around the world, dozens, probably over 100 real-time payment systems of different kind. It's harder to count those. Many of you have probably heard about Aadhaar in India, UPI, Pix in Brazil, and so forth. But these are really taking off also, these real-time payment systems, for instance, in markets like Thailand, Cambodia, Indonesia, very big market there. Smaller markets like Costa Rica, very advanced in this. And of course, there are RTP systems also that are run by the private sector in markets like Singapore, UK, Sweden, and so forth. So the DPI term, I think the public there is somewhat questionable. In many cases, these systems are kind of public-private partnerships, but oftentimes promoted by the governments. And I think like all of us probably want to champion what many governments want to do, is to help people get identified, authenticated, provide them with public services, enable them to have bank accounts and so forth. There are many positives, right? So we want to, of course, encourage to an extent this effort. But I think really the big question is, how are these systems designed so that the private sector can participate and play along? And I would say there's maybe 4 big questions. One is that level playing fields. Do we have a fair competition between these systems and the private sector? And what we're seeing is somewhat kind of outright subsidization of these systems by governments like Brazil or India, to more subtle forms of kind of stacking the deck, like helping making RTP systems the payment rail in public programs or public payments. Tax benefits for using RTP systems, like, you may get a value-added tax is removed if you use an RTP as a merchant and things like that. So there are these subtle forms that I think we want to map out and get ahead of as well. The second area where I think we want to focus on is the enabling environment, and perhaps particularly work with the development banks and others in the development space on that, on things like, are these systems couched in data privacy, cybersecurity, consumer protection, also connectivity in markets like Africa? Are people actually able to access these systems? And if you drop in kind of a identity system in the market, will it actually get used? So that's another place where the private sector is key. If private sector can kind of plug into these systems, and these systems, are not only have a great enabling environment, but promote interoperability with private sector solutions, then I think we're in the right path, right? And users of these systems are able to access public services, private services, and just have more user choice, essentially. And that's what I think what we're going for here. And then the fourth area, I think, as I've been watching the evolution also on the private sector side of like, oh no, there's a big wave and we need to kind of oppose to, oh no, there's a big wave. How do we now work together with these solutions? I think there's really opportunities as we're starting to see the weaknesses in, for instance, in some RTP systems, fraud being a big one. And many of you know this very well. There was something like $1.4 trillion of RTP fraud last year globally. Most of the payments fraud that occurs in markets like the UK even, but other markets as well, Brazil, India, and so forth, is in the RTP systems. And the majorities in these markets have experienced some fraud. So I think that's where payment companies like Mastercard could come into. You have fantastic fraud prevention, technologies, tokenization technologies, kind of secure checkout technologies that could really partner, I think, with some of these RTP systems. The other area is probably cross-border payments, right? These RTPs are kind of domestic, even Southeast Asia that has some of these RTP interoperability efforts, which are commendable. It only covers so many types of payments, and it doesn't cover extra-regional payments, right? Which are the lifeblood of the region. I mean, the region trades internally, maybe 25% is intra-regional, rest is extra-regional, even more in digital. So, there again, connecting with global payment networks is, I think, a great opportunity for the RTP systems to gain more users, but also for our own businesses. And then finally, the access to finance. Like you as a global payment provider, you have credit cards and other mechanisms, fintech partners that provide access to finance. I don't think many RTP networks have any of this. They just enable the payment. So if we can promote, again, connectivity between fintechs and those that provide credit and these payment systems, I think that's another area of opportunity. But I would look at this more like the train has left the station. How do we partner? How do we bring our technologies to bear? And then educate governments first and foremost about the solutions that U.S. private sector has.
Turning to you, Tami, more governments, including specifically in Korea, are copying elements of the EU's platform regulation. And that's specifically led to intrusive intervention in business and discriminatory enforcement against U.S. digital service firms. Can you tell us a bit more about what this development means, particularly for U.S. providers and the implications for digital service trade?
Yeah, of course. And thank you for the kind invitation for this very important topic. South Korea is emerging. Their emerging approach to regulating online platforms is mirroring the EU's Digital Markets Act, and it really risks importing the EU's economic stagnation along with its regulatory framework. The Draghi report, which was commissioned by the EU and released last September, openly acknowledges that overregulation of the digital economy has damaged Europe's competitiveness. South Korea should take this warning seriously. A heavy-handed, extraterritorial regulatory model that disproportionately impacts U.S. firms and some large Korean platforms while ignoring Chinese competitors could open the door to trade frictions and also erode investor confidence, just as the new Lee government takes office with a mandate to grow the economy. If Korea continues down the EU path of overregulation, the consequences could be dire. A chilling effect on innovation, reduced foreign direct investment, and fewer opportunities for small and medium-sized enterprises that rely on these platforms to reach their consumers. The Draghi report makes it clear that the EU's regulatory zeal has come at a high cost to its own tech ecosystem. Korea cannot afford to make the same mistake, especially when consumers benefit daily from the affordability, choice, and convenience offered by these platforms. A more measured, homegrown approach to regulation is urgently needed. The National Assembly and Korea's Fair Trade Commission moved towards replicating the EU's DMA. It might seem like global best practice, but it actually risks creating a significant trade issue. The current regulatory drafts appear to capture US-based firms and a few Korean firms while giving a free pass to the Chinese competitors who operate without reciprocal oversight. That's a recipe for trade imbalance and diplomatic friction, not fairness. The Draghi report has warned about the EU's loss of global tech leadership due to overregulation. Korea should learn from this, not copy it. And finally, the rush to emulate the EU's DMA overlooks a critical fact. Consumers are the biggest beneficiaries of a vibrant online platform ecosystem. The Draghi report makes clear that EU's regulatory missteps have led to slower innovation and fewer global tech champions. Korea risks the same outcome. And these platforms are not just big tech. They are vital infrastructure for SMEs, exporters, and everyday consumers. Overregulating them could undermine digital access, raise prices, and ultimately harm the very people the regulation claims to protect, while at the same time putting a massive target on Korea's back at a time when they're negotiating reciprocal and sectorial tariffs. I'll stop there.
Excellent. Thank you, Tami. Nigel, I just want to go back to you before we wrap. DSTs, that's on the thinking of many of the CSI members and U.S. companies. It's obviously something the current administration has talked a lot about. A number of governments have implemented DSTs, digital service taxes, that are scoped largely to capture U.S. companies. Could you explain for the group the risks of DSTs, that what they pose specifically to trade, to digital services, and why that matters, why we should care?
Yeah, I mean, it's funny, right? You've probably never met an official from a finance ministry that has left money on the table. And in many regards, when we talk about DSTs, that's a primary motivation for a lot of folks in a lot of different countries. They see an opportunity for a new revenue stream. Without recognizing, obviously, trade, technology, and diplomatic implications from that. And so we've seen them up until recently really proliferate because they think there's money left on the table. And if it's paid by large US firms, then it's there for the taking. But it's in the face of that we've seen, I mean, in one of the areas where we've seen a clear statement of commitment from the Trump administration has been on this. Everyone is very clear about, as it relates to digital trade and DSTs, that they will be held to account on this. And it's part of it cuts across so many of our remarks here of like DSTs as a tool of these broader agendas and initiatives we're seeing around sovereignty, around digital development, around emulating others and looking for others for inspiration of how they design their own systems. And so without recognizing how it sets an awful precedent in terms of enacting a domestic tax regime that is purposely designed to disadvantage major foreign providers, and how that can be reformed and repurposed for any scenario whereby the domestic player is at a disadvantage. And so it's a positive thing that the Trump administration has put everyone on record. A number of countries have already basically committed to rescinding their DSTs as a part of negotiations. And so hopefully we can get back to a point where they're removed as a threat from the digital trading environment.
And just quickly, Kati, just turning back to you specifically on DPI, I just want to get because you talked a bit about these models spreading. Just curious to hear your thoughts in terms of what U.S. companies can do to push governments that are, the value of making something competitively neutral and open to international providers. What's the case that U.S. companies could make in that direction?
Yeah, I mean, I think part of it is looking at cases like, cases like Sweden or Singapore or UK, where there have been great public-private partnerships, and really the DPIs are really kind of the DPP, like public-private partnership model, rather than driven by the public sector. So perhaps some of those use cases that where there has already been partnership between US companies and say real-time payment systems in those markets, that would be a good one. Then probably working with the development partners, the development banks that are supporting many of these systems to build in a design where there's a public-private partnership and there's opportunities for US companies to play. And definitely, I think even in markets like Southeast Asia, very savvy policymakers, but still probably lack of awareness of some of the products and services that US companies have. So that's another, is how do we educate and build trust that we want to work together. Something like this, I think would be the good first steps. And of course, many companies are already doing a great deal in this regard. Just wanted to echo what Tami was saying. We are actually doing a survey currently with 5,000 European consumers on the presumed impact of the DMA on them. And we should have this out in a week or two. We've found that, despite the inconveniences posed by DMA, Europeans love US services. They continue using them. 86% of European consumers use like 3 of US services in scope of the DMA every day on a daily basis. But what they are seeing is that some of the personalization of the internet and marketplaces and advertisement and so forth has eroded, despite the best efforts of our businesses. So I think they are seeing a kind of a worsening of the internet in Europe that I think the Koreans should learn about. as well. And we found that 1610 Europeans, for instance, found that the search is not as personalized or as user-friendly as it used to be, and maps don't work and so forth. I was in Europe myself a couple of months ago and found that there was a real discernible difference between these markets. And then I would say we found something like 60% of Europeans were ready to pay to restore the pre-DMA services. So they're actually willing to pay, which shows that they got a big welfare benefit from all the services pre-DMA.
Excellent, Kati. And Tami, just to close this out, in a similar vein, because you referenced regulatory replication, copycat, countries copying other countries. I mean, what are ways U.S. companies can kind of combat that, push back against that, just in terms of, the spread or contagion of these types of models that are going from one region to the next?
Well, I think partly what we're doing here, thanks to CSI for giving us this platform to talk about it. And I look forward to reading Kati's report and sharing it with my Korean friends. Again, things like the EU's DMA, to me, it's a cautionary tale, but my Korean friends are seeing it as a North Star. And I can't wait to wave your report in front of them and say, the Europeans are willing to pay to get it back. So I think we just need more opportunities like this. So huge thanks to Christy and her staff for putting all this together.
Excellent. I think we're at time. I think we're the last panel before the happy hour and reception. So we can wrap it there. Just everybody, if you could just give a round of applause to Nigel, Kati, and Tim. Thank you so much.
It comes out next week. Your-
Yeah, it depends a little bit in week or two. So
I
yeah,
would love to get a copy.
yeah,
I will
thank
share
you.
it with all my Korean friends.
Fantastic. Yeah, yeah.
Well,
They've been
thanks
reviewed. The new
so
version
much
is just
to
different.
Prashanth,
Fantastic.
Nigel,
Are they
Ka-
going forward
Kati,
with-
and
'cause I thought
Tami.
it was,
for the excellent discussion. And I think it's really fitting that we end on the digital sovereignty topic, because I think, as Prashanth said in the beginning of his remarks, that's really what is the river that runs through the theme of what we're having to deal with in terms of the reciprocal tariff negotiations, the NTBs and services and digital trade, and in the negotiation of new trade agreements. And I want to thank all of our sponsors, our board members, our board chair that had to leave to catch a plane back to Seattle. I want to thank all our panelists, and I especially want to thank CSI staff, Kim, Elsa, and Casey, for all their hard work and the efforts that went into putting this program together. So thanks very much to all of you. And I hope this contributed to all of us educating and thinking about what we can do more in terms of pushing the administration to address services in digital NTBs, and also how we move forward with very, very important partners like the EU, like the UK and India. And with that, let me just say again, thank you for joining us. And I invite you to the network reception that will be next door. So please stay and enjoy some cocktails. And thanks so much for once again attending.